Indian benchmarks delivered a strong session, closing decisively above the psychological 26,000 mark, reinforcing the narrative that India's domestic structural resilience is successfully neutralizing foreign capital outflows. Welcome to the evening edition of News That Move Markets. Here are all the key things that happened in the day. The Nifty 50 advanced 0.57% to settle near 26,047, while the BSE Sensex closed 0.53% higher. This rally was an extension of the recovery sparked by the US Federal Reserve's rate cut, but the real story lies in the structural shift underpinning this move. Despite foreign institutional investors offloading over 2,000 crore rupees worth of equities in the prior session, domestic institutional investors provided a massive counterforce, buying shares worth nearly 3,800 crore rupees. This institutional divergence, supported by relentless mutual fund SIP inflows, has created a robust liquidity floor that is insulating the market from foreign sentiment, allowing the domestic growth story to shine. The session was defined by a classic rotation of funds, favoring domestically oriented cyclical industries. The metals, real estate, and oil and gas sectors led the market higher. Specifically, the Nifty Metal Index was the outstanding performer, confirming investor conviction in India's capital expenditure theme. On the flip side, we saw some mild defensive rotation, with the Nifty IT Index registering a marginal decline. This underperformance reflects cautious capital movement out of export-oriented IT stocks and into high-beta infrastructure-linked names. The stock of the day belonged to Tata Steel, which surged over 3.3% to become a top Nifty 50 gainer. This jump was fundamentally driven by the company's decisive strategic blueprint for aggressive domestic capacity expansion. The board approved plans to add significant steel capacity in India by FY32 and sanctioned the acquisition of a 50% stake in Triveni Pellets for 636 crore rupees. This proactive move is highly margin accretive, ensuring feedstock security and signaling that the corporate sector is actively executing growth plans aligned with the national manufacturing thrust. Looking ahead, the Nifty's strong close above 26,000 places it firmly above its critical classic pivot point of 25,978. Moving averages across all major time frames signal a strong buy outlook, suggesting bulls are in control. For the coming session, the immediate floor rests at 26,017, which must be defended to maintain momentum. The next major test lies at the resistance 2 level of 26,076. A break above this level is crucial, as it could force the unwinding of heavy call positions concentrated near the 26,000 strike, potentially confirming a broader breakout from consolidation. Conversely, a failure to hold would see the index test immediate support at 25,920. Globally, European markets were trading in constructive positive territory, with the DAX up over 0.5%. However, US futures presented a mixed picture, with S&P 500 and Nasdaq futures showing slight declines. This continues to reflect a rotation out of expensive AI-linked technology stocks in the US, following disappointing forecasts from companies like Oracle. Meanwhile, Bitcoin maintained its position, trading up near $92,500, holding steady as global policy clarity settles in. The structural resilience demonstrated today, coupled with the India VIX dropping sharply to a new one-month low of 10.07, indicates high institutional confidence and conviction in India's domestic growth trajectory. While traders should remain mindful of residual FII selling and weakness in global tech cues, the bias remains firmly with the domestic bulls, ready to defend the 26,000 base. The market has effectively shown that local muscle now outweighs foreign volatility. This is Prem signing off for this edition. See you on Monday. Have a good weekend.